Cold hard truth time here. Sometimes it is just not possible to find the house of your dreams within your budget and your timeline, especially in our current real estate market with very, very low inventory. Buyers may be frustrated by losing out in multiple offer situations or by just not being able to find what they're looking for because the number of pre-existing homes is painfully low. It is next to nothing right now. Ever since the onset of the pandemic, we have been in uncharted real estate territory. By the spring of 2021, housing inventory was down 32% from pre-pandemic levels. And while it did tick up a little bit on a national level last fall, that momentum has fizzled out. According to a recent article by Fortune.com, inventory levels in January of 2022 were 42% below January of 2020 levels. Among the 327 housing markets tracked by Zillow, 254 of them have inventory levels that are down by more than 30%. Simply put, the housing market is even tighter now than it was heading into the frenzied spring market of 2021. So if you can't buy a house because you keep getting beat out, or there isn't a house that you like enough to purchase, what is the want-to-be homeowner supposed to do? Well, how about you consider the houses that other people are passing by because they're ugly and they need updating? This is where a remodel and construction loan could come into play. Today, I'm talking with Pete Johnson, a mortgage lender at Green State Credit Union. Hey, Pete, what can you tell us about this loan product and how does it work? How is this loan different than a standard mortgage?
Absolutely, yeah. So it's a great program. It's one of these questions we get asked a lot is, if I'm buying a house, I want to do some improvements to it. Maybe I want to replace some flooring. I want to do a room addition. I want to remodel a bathroom or kitchen. How do I get that extra cash? Can I borrow more than what the home is worth or more than the purchase price of the home? And typically with most loan programs, the answer to that is no, you can't, right? You're pretty much stuck with whatever the purchase price is. We generally can't go over the lesser of the purchase price or the appraised value. We're kind of stuck with that. With this particular program, it's a program we have here at Green State, we can actually factor in some of those improvements. And so what we have you do is we have you go out and get your plans and specs, any bids that you've got for contractors you're working with. And this can be anywhere from really complicated to not complicated at all, depending on how crazy you're getting with your remodel. But we take those bids, we hand that off to an appraiser, and we have them appraise the house based off what it will be, not what it is now. So at the finished project, which is kind of how you're probably looking at it. And then we'll lend you up to 100% of that value. The only thing that you have to come up with really out of pocket is 10% of the improvements cost. So let's say your remodel was around $20,000. You would have to come up with about $2,000 out of pocket that we hold back. And that money's actually just held in reserve. It's almost like an escrow account. We hold it back in reserve to make sure that there's no overages, major overages. You've got some money held back for that just in case. And then when the project is over, we give it back to you and you can apply it to your project. Otherwise, we'll lend you up to 100% of that home's value. You don't have to put 20% down, you don't have to put 10% down. We'll actually give you up to 100% of the home's value to do that. So.
Okay, Pete, how much money can a buyer get for a remodeling project? Is there a cap?
Yeah, on the purchase remodel program, you can actually get up to $100,000. So that's a pretty sizable remodel. If you're doing things that are a little bit more complicated, maybe you're doing a huge room addition where we're starting to get into the maybe $200,000, $300,000 projects, we'll probably switch gears and go with a construction loan. A construction loan is fairly similar to the remodel project. Does require a little bit more money down when we start getting into the higher amounts, but typically speaking, we try to keep that program within about $100,000 or less.
That's interesting. In your experience, what are the more common remodeling projects that the buyers are hoping to do?
Yeah, typically it's kitchen, bathroom remodels, the typical stuff that people want to do, replacing flooring, things like that. But a lot of it too is like deferred maintenance stuff. Maybe the seller that left the property had not done any painting. Maybe you got paint peeling, you've got windows that are maybe rotted, stuff like that. And a lot of times it helps when you're trying to buy a house that is so dilapidated. You can actually find houses that are such a fixer-upper, I guess I should say, that they can't be financed with the normal loans. Typically the house has to be in good enough condition because there's always two parts to qualifying. There's you and then there's the house. The house has to be in good enough condition to be used as collateral for a loan. And so that becomes a problem. This program resolves that because it allows you to use the bids that you're getting to fix those things, and we're always looking at it from the perspective of the house after it's fixed, not in the condition it's in now. And that might actually allow you to go ahead and finance a house that may be in such bad shape that you wouldn't be able to get it financed on a normal conventional loan.
I see. That really opens up the possibility of houses that the bulk of other buyers
Right.
out there aren't even considering.
Right.
You have to be brave, though.
Yeah, you do, yeah.
All right, so how does the appraisal component of the loan work during the underwriting, since the remodeling project won't begin until you own the property?
Yeah, so we'll do usually one of two things. Sometimes we can get away with just doing one appraisal based off the plans and specs, and then hopefully that appraisal comes in. The only difficulties we usually have with this is sometimes the appraisal doesn't come in at value. We might have to come up with a little extra cash. For example, if your project was $20,000 and the appraisal only ended up coming in maybe $10,000 over or $15,000 over the actual purchase price of the home, there may be a chance you have to come in with a little bit of cash to make up the difference. So we got to have enough money there. This usually only happens to some of the larger projects that we get. But generally speaking, we'll do that per plans and specs appraisal. There are some cases where we actually have to do an appraisal on the house all by itself first, because really the contract that you have with the seller is to buy the house, not so much to do the improvements. Sometimes we'll have to do two appraisals. It just depends on the situation. One for the house itself in case the appraisal doesn't come in on the remodel, and one for the remodel. Adds a few $100s worth of cost to the project, but a lot of times, most of the buyers that I'm working with feel that it's worth it. It's worth the extra couple $100 to figure out if maybe they can kill two birds with one stone.
I would be interested in that if I was a buyer, because I would want to know what instant equity will I be adding.
Exactly. Yep. It does help you arrive at that number. So.
Okay, so does a buyer generally need a plan of what they want to do, like a hard and fast plan from a qualified contractor with actual bids? Also, what if the homeowner plans to do some of the work themselves?
Yeah, so having a general plan is usually required. We usually have to have something, some kind of framework to work off of, because we need to be able to tell the appraiser what the house is going to be worth in the future. So we need to tell them what you're doing that's going to make the house more valuable later. And so the more accurate the bids you have, usually the better. So if we can pin those down as close as we can get them, but they don't have to be dollar for dollar, and that doesn't mean that you can't make changes to them. We just want to make sure that the bids kind of match up with the reality of what you're doing, that we don't end up with the cost of a project that vastly exceeds what the bids were, because we're going to be limited based off what the appraisal comes in at. So the tighter we can get that, the better, but again, it doesn't have to be every single fixture, every single light bulb that you're doing. We don't need that, need it dialed in that much.
So what if the home buyer is handy and they want to do the work themselves? You get the bids, you have an official bid by a qualified contractor, and then you do all that you can do yourself?
Yep. On these projects where we're talking these $100,000 or less projects, typically the home buyer, the homeowner, can do most of the work themselves. You're generally going to be contracting with smaller contractors, especially on these jobs that are kind of under $50,000. You may not hire a general contractor, and that's okay. You can do that. Of course, we always recommend, if you're doing some of these larger projects where we're doing structural things with the house, where we're tearing down walls, moving walls, stuff like that, you're probably going to want a professional. Unless you're in the trade, you're probably going to want a professional to help you out with that project. So.
Okay, so is there a timeline between how soon the project needs to be completed and how soon it needs to be finished once the buyer makes the purchase?
Yep, that's a great question. So typically we like to see the improvements done within about 6 months. So whatever project you have going, typically 6 months is kind of that time frame, but I would say inside of a year. There's some flexibility with that. Obviously, there's always some unforeseen circumstances, especially right now with construction material delays, stuff like that. There's a little bit of leeway there. But generally speaking, you want to try to keep it in within a year. It's not one of those things where you want to kind of drag out over the course of 3-4 years. If we're going to do that, if it's going to take a little longer, we might look at maybe a home equity loan down the road, or maybe a construction loan down the road, as opposed to the remodel.
Plus you've got your 10% that's being held.
That's right. Your money's being held.
Your money is hostage.
That's right.
All right, thanks, Pete.
Absolutely.
If you would like to talk to Pete about mortgage lending options here at Green State, you can find all of his contact information down below in the description box of this video. And if you would like to talk to me about buying, selling, or relocating here in the greater Iowa City area, all of my contact information is there also. If you're watching on your phone, all you need to do is tap the title of this video and the description box will open right up. If you watch my videos, you know how I end every one. And Pete, we need to snap our finger, spin around, and walk off into the sunset.
That sounds right.
So, hey, it's been fun. And we'll catch you later.